An interesting trading session, given that just a day ahead of the monthly expiry, that's tomorrow, you saw the Nifty give the first signs of a shakeout. We started off quiet in the back of mixed signals from both US as well as the Asia market cues. So quiet is how we started off in trade, and then slowly and gradually we began petering down from that quiet positive start. So at one point in time, about half an hour into close, we were down about almost 250 points on the index, and that got very swiftly bought into. Just goes to show the kind of optimism out there in the market, and there are buyers at every given decline. Net result, we closed in back at that 17,700 level for the Nifty, a dip of about only 126 points coming in, and I say only because at the lows of the day, like I mentioned, we were down about 250 points on the index. For the breadth of the market as well, while we closed in over 100 stocks standing in favor of the declines, we did recover a little bit from the lows of the day. What's quite peculiar about this market is that you are seeing the expensive pockets of the market wherein fatigue signs are actually setting out. So be it technology, which for the last 2 days have seen some dips, so the likes of most of these stocks, and market cap agnostic here, be it a Coforge, LT Infotech, LT Technologies, Mindtree, Emphasis, after those downgrades that came in on both these counters yesterday. Be it the big boys, the TCS, Wipro, Infosys, the entire pack has seen some ebb off in the last two trading sessions, and today was no different. Today as well, you had TechM slide by about 4%. You had Infosys, Wipro, HCL Technologies, TCS, all be laggards. Also was the case with the current favorites. Bharti, for instance, was the top drag on the index today. That fell by about nearly 4% in trade, or for that matter, financial majors like a Bajaj Finance and Finserv as well lost a fair bit today. Bajaj Finance was down in excess of 3% in today's trading session. You also had ICICI Bank as well as IndusInd Bank too, which were laggards in today's trading session. So this is the one thing that one really needs to watch out for. IT practically has had a one-way move up, not just year to date, but even from the March 2020 lows, much unlike its other counterpart, pharmaceuticals, which have begun that corrective and consolidation phase in the last 2 months at least. So these pockets may see some profit taking come in. But that said, you've got Brent as well, which is now perked up back to $80 per barrel mark, and that's really bringing about its effect on the oil sensitives. So while companies where you have raw material costs go up because of crude spiking up, like paints for instance, those stocks actually got hammered today. But on the flip side, ONGC and Oil India have been showing fair amount of momentum the last couple of trading sessions. In fact, ever since crude began its spiral up, and today was no different. Both these stocks were big winners in today's session as well. IOC closing in with a 3.6% gain. That said, the PSU pack, which really held out very well, was a couple of the infra plays like a BHEL, and everything to do with power from within the PSU pack was holding up. Be it a power grid, be it Coal India, NTPC, PFC, REC. These were all, hogging the limelight in today's trading session. But tomorrow's another day, could get a little bit more choppy given that it's expiry as well for this series, which has seen record highs for the markets. So we'll pick up all the action tomorrow morning.